The news day continues here on One News Now. One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. Key government officials urge U.S. firms to invest in the Philippines during an economic briefing in Washington. NEDA Secretary Arsenio Balisacan enumerated several factors which make the Philippines a more attractive investment destination. These include sustained economic growth, young workers, and recent structural and regulatory reforms to improve business climate. Finance Secretary Benjamin Jokno said infrastructure development is the front and center of the Philippines' growth strategy. He added that the country is determined to sustain high infrastructure investment in the next 6 years through public-private partnership.
I can assure you, as my colleagues have done, that as investors, you have many reasons to look forward to these next few years as you consider opening and expanding your operations in the Philippines, one of the strongest performers in East Asia.
Now, the spectrum of industries that foreign investors can participate in has grown wider than ever before. The economic liberalization measures that the Philippine government has enacted in recent years have opened up key high-growth sectors to international participation.
Fitch Solutions has maintained its 2023 economic growth forecast for the Philippines at 5.9%. This outlook, though, is slower than the 7.6% GDP growth logged for 2022. The growth projection comes as Fitch Solutions forecasts inflation to remain on a downward track for the rest of the year. Fitch Solutions also expects the Bangko Sentral to raise benchmark rates by another 25 basis points before pausing at 6.5% after. However, Fitch says the BSP could still hike rates beyond 6.5% if inflation remains elevated and if the peso remains vulnerable. New vehicle sales rose 24% on an annual basis in March. According to the Chamber of Automotive Manufacturers of the Philippines and Truck Manufacturers Association, vehicle sales reached more than 36,000 units in March, higher than the over 29,000 units sold in the same month a year ago. Month-on-month, March vehicle sales increased by over 19% from nearly 31,000 units sold in February. CAMPI and TMA attributed the increase to strong consumer demand amid favorable economic conditions. The entire local vehicle industry is targeting over 408,000 sales this year, 10% higher than last year's record. We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. The Department of Information and Communications Technology, or DICT, has yet to decide on telcos' appeal to extend the SIM registration deadline. But speaking to 1PH sa totoo lang, DICT Assistant Secretary Jeffrey Ian D. says he is personally in favor of an extension. However, he does not agree that the extension should reach 120 days, noting that they are racing against time. Subscribers have only until April 26 to register their SIMs or risk deactivation. As of April 10, only 38.8% of the 169 million subscribers nationwide have been registered.
The more na pinapaasa mo yung mga tao, okay, mag-alala, mag-extend yan. Lalong nag-extend yung time.
No.
And remember po na we are also against time because we're trying to fight. Why are we doing this? Yun muna yung pag-usapan na. Bakit pa natin ginagawa yung SIM card registration? Kasi we're trying to fight cybercrime, specifically phishing and scamming. And the more we prolong this registration period, the more they can attack.
Inflation in the United States slowed in March but remained above the Federal Reserve's target. According to fresh data, the rate of inflation year-on-year fell to 5% last month from 6% in February. The report showed a 0.1% increase in March, much lower than the 0.4% reading in February. Although President Joe Biden greeted the latest figures as a sign of progress, commentators noted that it was still far above the U.S. Central Bank's 2% target. This despite the Fed's effort to temper rising prices of goods through numerous interest rate hikes over the past year. Bitcoin climbed above $30,000 for the first time since June 2022. Blockchain Capital General Partner Spencer Bogart speaks on Bloomberg TV to discuss why Bitcoin rallied past this mark and why he thinks lingering inflation concerns are making the virtual currency an attractive asset. Let's listen in.
What do the fundamentals tell you about what on earth is happening with Bitcoin right now?
So most of the fundamentals that we deal with are early stage
I should also
startups,
say, but which fundamentals? Are there any fundamentals you can point to?
So most of the fundamentals we work with for early stage startups are related to all the things you'd see in any traditional software startup, right? We're looking at user growth, we're looking at transaction activity, depending on the particular company. Now, here for Bitcoin, when we're trying to describe or explain the price action, we always want to come back to one reason. But the reality is that there's a wide variety of market participants in crypto. And so I think that there's myriad factors at play simultaneously. You already touched on a few of those, but one of them is the lingering inflation concern.
Well, here's the thing. I want to channel my inner Katie Greifeld.
Sure.
Because she lives Bitcoin second by second.
Yeah.
And she basically points out no earnings, no cash flow, no underlying business for you to analyze. You actually just pointed out the opposite. Those are exactly the sort of criteria you're looking at when assessing Bitcoin's push higher.
Sure. So, I mean, for a lot of people looking at this, I think they're seeing there's still some concerns about inflation. So the idea of a scarce asset with a fixed supply has appeal. There's still some lingering banking concerns, even though the peak of the concerns have died down. But that increases demand for an asset that people can securely self-custody as owners. Right, so those are two of maybe the four reasons I'd say that are driving Bitcoin higher.
Hey, Caro, in the technology sector, whether it's equities, whether it's crypto, if in doubt, go back to inflation in the Fed.
I mean, that was always the argument. Was it an inflation hedge? That didn't seem to bear out from the numbers when we saw inflation, Spencer, but we do see it more of a buffeted about by the Federal Reserve and risk tolerance. What about institutional players? We were talking to Katie about that. Are they starting to be tempted to come back in when we see a 30,000 level?
Absolutely. I think for the institutional players, I mean, listen, we run a venture capital fund that invests in early stage companies. A lot of our limited partners in our fund are large institutional allocators, endowments, and pension funds. And an increasing number of them own crypto directly, primarily Bitcoin and or Ether. But then they also want additional exposure via venture capital funds that are invested in the space. So there is absolutely an appetite from them, but overall I would say that most of them allocated over the past couple of years and have not been adding more recently.
Go to ETH for us, because we are looking towards what is the continuation of the upgrade to more of a proof of stake concept. We're having the Shanghai upgrade tomorrow. In layman's terms, what does that mean? Do you expect there to be more volatility around the space?
I don't expect a lot of volatility, but in layman's terms, what's going on here is that the way that the Ethereum network is secured is by people providing or staking their capital, their Ether, into the protocol itself. They're rewarded for doing so financially, and what happens tomorrow is people are now able to withdraw the Ether that they have staked. So this only started a little over a year ago when we had the merge that proof of stake really came into being. And now what we're about to see is that people can withdraw the assets that they have staked. That said, from our conversations around the market, we're not seeing a lot of demand for people to unstake their assets. So we mostly think that this will be a non-event tomorrow.
Yeah, Spencer, many have been saying it feels as though the players who have staked their ETH, they're long-term committed to the space. But Ed, whether or not venture capital remains long-term committed to the space amid some of the debacles of last year, that's still the key question,
Yes.
particularly as they, are much more nervous to write checks.
Yeah, and that's where I would go to Spencer next, because we've been distracted by artificial intelligence. We've looked at volatility. I mean, as an asset class, Bitcoin still carries a lot of volatility, Spencer. The root of my question is, have any of the sort of psychological drivers in this market changed so far in 2023 when you think about the SVB fallout, or has the crypto community kind of just got on with it?
Mostly people have just gotten on with it, right? I mean, there are some new headwinds, I think, from FTX collapse that is presenting regulatory headwinds.
Right.
But overall, the industry is just pushing forward. It is much more organized than it has been historically, at least in terms of tackling some of these regulatory and political issues. So overall, what we're seeing is for venture capital firms, they're following the talent. And they're watching that there continues to be a flow of high-quality talent into crypto companies and crypto markets.
Spencer, you just mentioned there, though, that you got on with it amid the collapse of Signature, of Silvergate. I'm interested in the banking rails, though, and how much that has impacted liquidity.
It's certainly been an impact. I mean, several of the largest banks that were servicing crypto companies provided critical infrastructure for all of those companies to be able to exchange capital on a 24/7 basis. That's particularly important for crypto markets that operate 24/7, 365. Now some of those banks have been put out of business, and there is an open opportunity for someone to recreate the infrastructure that previously existed.
And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News. All sides, all the time.